Welcome to another episode of COVIDCASTJA. Can you imagine? We are at episode 6. So far, we've talked about initial recommendations to SMEs following the COVID pandemic. We've had conversation with bankers about the relief packages. We've spoken to government about the government's care package. We've had HR experts talking about the various labor issues that have arisen through this pandemic. And last week, Nevada took us through some other critical considerations that SMEs need to bear in mind as we navigate the pandemic. In fact, we talked about pivoting, and we got quite a bit of response on pivoting, and we encourage you to continue to send in your questions. In fact, you have to ask yourself, did I get the memo for this week? Because this week we're talking about credit. We're talking about taking loans. How do you manage your liquidity, that cash management? Did you get the memo this week? If you didn't get the memo this week, please send us an email at sme@psoj.org so that you can get on the list to get those tidbits and points that we will discuss. This week, we're going to be joined by our expert, Nevada Powe. Nevada is an international financial consultant. He is a Jamaican, born right here and schooled here on the Rock. He went overseas, attended Harvard, and he has come back to serve Jamaica, and he has come back certainly at the right time. We're also going to be joined this week by John Sinclair, who is CEO of CreditInfo, and by Edison Galbraith, who is the General Manager, Loan Origination and Portfolio Management from the Development Bank of Jamaica. But we're going to start our conversation today with Nevada. Welcome, Nevada.
Hey, good to see you again, Rochelle. We're back again, episode 6.
Episode 6. So this week we are talking about liquidity. And
Absolutely.
one of the things on this program is that we like to break things down, because sometimes we assume that everybody knows what we're talking about, so that everybody is on the right page. When we are talking about liquidity, we're talking about the question of how much cash is enough to survive the pandemic. Is it a guessing game? If you guess wrong, you could come out on the wrong side of COVID. And if you guess right, you could come out on the right side of COVID. Is it a finger in the air, Nevada? Because many SMEs are wondering if they should take out a new loan or accept the bank's loan moratoriums or deferrals in order to cover their business expenses in the short term. We're getting the emails, we're getting the calls, the banks are reaching out, and people are wondering, should I take up this offer? How much liquidity, how much cash is enough? We're going to talk about this today. And one of the things you've said from the get-go is that the reality of this, the harsh reality, is that it depends on some critical factors. There are 7 critical factors. What are these critical factors? I'm learning.
Yes. Starting in, always a set of factors. So we're actually in this week's memo, which is why you should also get it. We actually outlined in a table, and almost as a way you have to circle each thing that's relevant to you. But we're going to go through it in detail, and then hopefully by the end of it, you'll come to your own assessment about what you should be doing and how you should be doing it based on your situation. The first question is going to be around how badly is your situation? How bad is your situation now? Specifically, at one extreme, is your business closed? Is absolutely nothing going on? For example, maybe your business was heavily dependent on cruise ships coming to Jamaica. In a situation like that, you're probably not very active. At the other extreme, maybe you have pivoted to something that is working for you and you're moving forward, or maybe your business is still viable, maybe not as high as it was before, but still very viable, and therefore that's a more positive situation. So the first question that you ask yourself is, what is the current situation? Closed, or are we making headway? It could also be that you could be in a massive growth area. If you're doing medicine and PPE, protective equipment for the front line, your business is growing. So the first thing is just to identify, okay, what is my situation now?
Okay, so when you identify, because that's a reality, very big to ask yourself, especially if the answer to it is that the situation is bad, the business has closed.
Yes, yes.
So
absolutely.
in that situation, if we were to look at, we have a situation where the business is closed, or we have a situation that we're in a high growth area, such as medicinals, protective gear, masks. You've pivoted well. So you have these two extremes. Where do you go from there?
Okay. Then you have the second issue. How soon or how likely are you to recover? Now, if you talk to any Jamaican woman, the number one thing she's dying to do when the lockdown open, is to get her appointment at the hairdresser. That means that entire industry has pent up demand. In fact, some hairdressers may be working and going to people's house and still working. That means you're on a proposition that your business is just waiting to burst open again, right? That's one set of things. The flip side, again, go back to the cruise thing. You have a craft shop at a port where the cruise ships come in, or you have an activity that most of your customers were passengers who came on the cruise ship. What we have heard about cruise internationally is that that industry is likely to be close to 10 years before it comes back. Why? 1/5, 20% of the cruise ships were infected. That's 20% of the worldwide capacity. Those kinds of numbers is registering people's head. Now, if you think about who takes cruises, older people who are at risk for COVID. Now, I ask you, Rochelle, I love your mother. 2 years ago, you would have said, Mommy, a great gift for your mother would be, you're going to send Mommy on a cruise with her friend. I don't think you're doing that now.
No, I think not to Port Royal.
Exactly, right? So suddenly now, something that was, the cruise industry had a lot of debt, a lot of lucrative investment, mega ships had come out, that is going to actually shrink. So if we, depending again on where you are, so where are you now and how likely is it that you're going to return? If you're a hairdresser, you're coming back as soon as it opens. If you're dependent on cruise passengers, you're not coming back anytime soon. So you have to, again, do that honest assessment.
All right. So we are at, where is my business?
Yes.
How likely am I to recover?
Yes.
What's the third factor that you need to consider?
What is the intended use of funds? No.
Okay. And this is use of the funds that you borrow from the bank.
That you're going to borrow, or cash that you have, how are you going to use them, right?
Okay.
On one hand, if you are a business that was, for example, a retail, and you're moving to e-commerce, so you're building a website, you're doing online marketing, you're trying to build current revenue, that's a good way to spend funds. If you are a restaurant that was paying rent, but obviously at this point, nobody for the most part is coming to your business to sit down, I wouldn't borrow money to pay rent at this point. Again, because that is holding on for a long time for something that we don't know when that is going to occur. So again,
so in a situation with the restaurant, are you in a better position to negotiate a reduction in your rental or a deferral of the rental rather than borrowing money to pay the rent?
Absolutely, that's the first thing you should do. But even after you've negotiated the deferral of the rental, you have to ask yourself, what if my restaurant is not open for 6 months, 8 months? And am I willing to cover the rental for all that time while I'm not having anybody there? Now, very often we have the mental thing, oh, it's just another month, it's just another month. If you're looking at the situation sort of dispassionately, it's not going to be like a 1 month, 2 month thing. It could be a while longer. And I would say that in a situation, for example, we're investing in e-commerce and investing in a website, that is a situation where you're investing in current revenue. If you keep investing in rent on a location that's not likely to open again soon, you're not investing current revenue, you're investing on a hold. And the question is, are you better off moving out of that space, negotiating whatever you need to do to end it, and wait and find another space again? Because here is also what's happening. We know that a lot of restaurants are also going to go out of business in this time. So the ability to find space in 6 months, 8 months, a year from now will not be a problem. You'll be able to find space. And in fact, you'll be able to find a space already fully equipped. So just be dispassionate about how exactly you're going to use your funds and bias towards using your funds in something that is going to make you money now versus the promise.
So Nevados, 2 points.
Sorry, I would say one thing. That being said, if I was a hotelier, for example, and I have no customers, hotel is closed.
Yeah.
I would say in a situation now, what are the key things that I need to do to maintain the asset? So, for example, a lot of our hotels are on the beach. So there's salt water problems that typically happen. So you need enough money to maintain the property so that when you reopen, it's fine. And the second thing is very often hotels have 2 or 3 people, which are called part of the hotel brand. There's always a bartender that customers come back every year. Winston, them come back every year to see Winston. Winston, nobody can make my margarita like Winston. You want to keep Winston on payroll. There's a particular housekeeper that you have, and she can turn 10 rooms in half a day, right? You want to make sure you keep her because she's hard to find, and the property. So you are minimizing your required investment. However, you're making sure that those minimums are done in a targeted way so that when the time comes back, you can spring into business. You know, so you don't want to spend, you would not want the property, for example, to deteriorate in the time that you are waiting for it to reopen.
Okay. So in terms of, say, if we look at, say, a hotel property, and a hotel, the property is owned by the operator, and they're offered a mortgage moratorium or a deferral. Is that something, the hotel is closed, is that something that they should be considering?
Yes, they should consider it, especially for this reason. Okay. I would also separate a hotel that is high-end with a lot of repeat guests. I'll tell you why. From one that is a lower end and not a lot of repeat guests. And I'll tell you why I see those differently. When we come out of this pandemic globally, the first people that are going to be able to travel will be wealthier people. So if your hotel focuses on wealthier people, that will be a group that will come first. Much of the middle class, which we've started to see, will not see travel as an immediate thing for them to do. There's other things that they're going to have to focus on, right? So they won't necessarily come right away. If you have a lot of repeat business, that means you also have a ready market of people who are dying to come back to you. We have hotels in Jamaica where people come every year or twice a year. And those hotels, you know, it's like the hairdresser. It's a similar thing where you have pent-up demand because they know Christmas time, New Year's time, whatever time, they're in Jamaica at Round Hill, at, you know, whatever the other property is. So those situations you would take on. In a situation where you don't have a lot of repeat visitors or your property is focused on middle class or lower middle class, I would be more hesitant because that would be a situation where you're not sure and therefore you don't want to take on additional debt to in that situation. Does that make sense?
So Nevada, it makes a lot of sense. And what I'm getting from you is that after you've done this assessment of your business and you've determined, is there pent up demand for my product or for my service?
Yes.
Then you have to ask yourself the question, when I'm borrowing this money, for what purpose? What is that intended use? Will it make money for me now or sustain the business that I currently have so that I can fulfill the demand?
Yes, that's absolutely correct. Yes, so that's the third. The fourth is, if you get the funds, how long will you last in the current condition? Now, if your business plan or your business horizon is 3 months, and you're saying, boy, I'm just going to buy this, let me buy 3 months. That is a more risky situation than if the COVID money you have gets you through 6 months or even better, 12 months. Again, we are in unpredictable territory. We don't know how long things are going to last. Even governments that are saying we're going to be open in May, June, whatever, what you're hearing the health people say, we may open and we have to close again, depending on the numbers. So this is always going to be a complicated thing. So I would not bet hard on a 3-month plan. Give me a 6-month, 9-month plan. And then I start to get more comfortable that could be in the zone or more likely in the zone of borrowing money for. So if borrowing the money only buys you 3 months, I don't know if I would take that decision to borrow the money now. If borrowing the money gives you 9 months, 12 months, yes, much more likely for it to make sense for you.
Okay. So Nevada, so I'm speaking now as an SME. So
yes.
SMEs are watching. They're saying, when you say this 3 months, 6 months, 12 months,
yes.
9 months, extended period, God, Nevada, explain to me, how am I supposed to work out at this time how long this money can take me through? What are the considerations for me to determine if it's a 3 month money or it's a 6 month money or a 9 month money? How do I do that?
Okay, so in the good situation, right, where you're actually still in business, even modestly in business, and all you do is covering a little bit of so most of the expenses are covered, and just covering up. You just need to cover a little bit extra. That's how you do that calculation, right? In a situation where let's go back to the hotel again. Remember, if you reduce all the costs, you just want the maintenance man and the thing to clean up and to do like a painting, and you want the bartender and the housekeeper. That's how you do that calculation. So if I had no money or if I had some cash, what is the extra that I need just to cover that? You multiply it by 9 months and you see it. If you are in the craft shop business, depending on the port, and you have 9 months worth of rent to cover because nobody necessarily coming in that time, if you decide to do that, that's what you're signing up for. So it really is about what is the monthly expense that is required to keep my operation open or potentially viable. How much cash or revenue do I have to support it? And if I don't have, if I'm not 100% covering it, then I'm going to borrow to cover the rest. And that is the amount that you're going to have to borrow, or if you have cash, obviously you can use it. But that is the amount that you're going to have to borrow to cover you. And I would say for 9 months. Make sure you can see your way through for 9 to 12 months, because that you're standing on a more viable proposition.
Okay, so our viewers, we are joined again by Nevada Powe, is the lead architect of the PSOJ SME project. Today we're talking about how much liquidity, how much cash do I need in the pandemic? What are the factors that I need to take into consideration if I'm going to take a loan? So please, we would love to hear your comments. So please comment on our live, ask questions, ask specific questions about your industry, because we're going to be answering your questions later in the show. So we're looking forward to hearing from you. So Nevada, you've gone through 4 of our factors. What else is there to consider?
Okay, the 5th now is what I call your pre-COVID personal financial character. No. You have to do that, what I call your personal assessment. By the way, recognize when you're filling this form at home, you have a lie to nobody. It's just you and yourself and God having this discussion. So I find sometimes that people trying to fill out a form and then trying to trick them, but there's nobody to trick. It's just you assessing for you, right? So what you want to look at is what I call your pre-COVID personal financial character. Okay, if at the end of every year, you owe more money than you did the previous year, or you're often late with bills and low payments, I would be concerned with taking on additional debt. Let me tell you why. The entire economic situation is now more risky for everyone than ever before. And therefore, if you are at what I call the financial edge, just making it in terms of the amount of borrowing that you are doing, don't take the chance now and put additional debt on your situation, because it's likely, if you're just on the edge and the whole situation has gotten more risky, you're likely to fall, right? So in that situation, I would say, boy, what kind of borrower am I? Am I borrowed to capacity? Am I always late with my bills? Am I always borrowing money from friends? Am I always going to the bathroom when the bill for the restaurant come, right? If you're that person, be careful. Let's take the other side, the other extreme, right? You're somebody who you pay most of your bills on time, maybe even a little ahead. Every year, you put away some form of savings. It means that you are financially, from a financial character perspective, you're solid. Therefore, you can take on additional risk because you know how to be thrifty. Especially if it's for 10 years, no matter what job you had. There are certain people, no matter what job they had, they saved. That is the type of person that is going to make it now through this time. That person can take on a little more debt because they're going to be careful how they spend it, and they're going to be careful how much they take on. They have started in what I call a solid financial character position. Obviously, if you're in the middle, which is every year, a little debt, a little bit of savings up and down, then you can probably proceed, but recognizing that you're not as solid as a person who have savings over time, and you're certainly not as bad as a person who will borrow more money every year.
So I think when we were discussing earlier, the way you put it is that the creatively thrifty will rule the day.
Absolutely. Absolutely. Yes.
Okay, we've gone through 5. We've looked at our personal financial character. And viewers, Nevada did mention this is a personal exercise. For some of you, you may have to do that personal exercise with your accountant, but it's not a time for any judgment outside of this is the reality of my personal financial situation. So Nevada, what else? We said there were 7 factors. What else do we need to consider?
Now you want to look at how the bank or the financial institution is actually structuring the loan or the moratorium. And you need to have them, if you can't do the calculation, they need to show you what the payments are on an Excel spreadsheet, month by month. If I take this moratorium or I take this loan, show me what I'm going to owe in May, June, July, August through the end. Because some of the financial institutions, for example, will be doing what we call capitalizing the interest, where you're paying interest on interest. What do I mean by that?
Please tell me.
You have a certain amount of money due, right, for the next 3 months, including the interest on your loan. And what they say is, okay, you're going to get a 3-month moratorium, which means that you're not going to have to pay for the 3 months of interest in the time, and then you're going to pick it up afterwards, right? The first question you're going to ask them is, when is that payment for those interest months that I missed due? Is it due all of it in the 4th month? Right? That not work. Is it due sort of at the tail end? So if I took 3 months now, is it added at the end? All right, that's kind of more in line with what I would imagine. If it's what do I have to pay on top of that interest? Is it free or low cost, or are you going to add my interest to the overall cost of the overall principal of the loan, and then say you're going to pay the interest on top of that interest? That means you're going to see some serious balloon payments happening down the road. This means you must get your banker, if you can't do it yourself, to walk you through the month by month payment that they expect once this thing goes forward. The other question you need to ask is, suppose we come to the end of the 3 months in the moratorium and my business is still not open. What happens then? You may not have to trigger the decision then, but make sure you're clear that once this 3 months is over, what is going to happen in month 4, 5, and 6 if the situation continues. Again, you want to see that Excel spreadsheet. So when you go into the bank, if the moratorium is only 3 months, but my business is still not happening, what then will you allow me to do? Again, be clear, people. Do not just take the money because it's available and then go about your business and then hope and pray that Jesus is going to rescue you at the end. Jesus not coming to rescue for this one. So be clear up front in terms of what you are going to be expected to pay.
Okay, so Nevada, for persons are listening, they would have gotten, various notes coming in from the banks. And their bankers have been reaching out. So this is an important time for us to read the fine print and to ask the questions. You may be asking yourself, even after Nevada has explained what is interest on interest and capitalizing interest, you may still be saying, what are those key questions? Nevada, can you just tell us 3 key questions that need to be asked of your banker? Because some of us don't understand, even when we talk about this interest, what does it all mean? What are the key questions that you need to write down that you need to ask?
Again, firstly, when I get this 3-month moratorium, when is that money going to be due? Is it going to be due in the 4th month? Is it going to be due little for each month to the end of the loan? Or is the life, or what they call the tenure of my loan, going to be extended by the 3 months and it's going to come up at the end? That's question 1. When I get this 3-month moratorium, when is it going to be due? At the 4th month, little for the rest of the loan, or at the end?
Okay. And so when is it going to be due? Is it going to be due all at once at the end of the moratorium, or is it going to be broken down over a period of time, or is the loan going to extend? Yes, okay.
Absolutely. Second question, how much am I going to be charged for this break, for this moratorium, this 3-month moratorium? And that is, are you going to give me some small interest on top of the interest? You're going to give me some big interest, or are you going to give me no interest because I've been such a good customer? Ask the question. And by the way, remember, even if they tell you something that you don't like, ask if it's possible to do something else. They may have some flexibility, but may only have flexibility for those who ask. How is their interest on the interest, and how much is that? How do my payments actually change? That's the second question.
And that's very simple. How will my payments change?
Yes.
Okay. The third question.
I would say get the Excel spreadsheet, which is month for month. Now that I've taken this, April, May, June. I want to see July, what is expected? July, August, September, October, November, December, for the tenure of the loan. I want to say month by month what is expected, and make them show you the number. Don't make them tell you, yeah, man, no, you need to see the sheet.
So tell me here.
Yes.
I am a small business owner, and SMEs, I know sometimes we are a little, as my nephew would say, are scared to ask the questions.
Yes.
This is not a time for fear. You have to be bold. You have to ask the questions, because this is your future. This is your business that you're talking about.
Yes.
You want to see month by month what is the change in my payment going to be, and you don't have to make a decision at the spot. Sometimes you have to go away and you have to look and properly assess the situation. So Nevada,
I will also ask the bankers, in fairness, if somebody is coming in, make sure it's part of this thing that you're laying out for them, right? Because some of the things is that they don't spend the time. Then recognize also that the SME is scared, and you as a banker need to be hand-holding. And there's one more piece, Rochelle, that has to be clear, right? If my business is still not open or back up to where it could be at the end of the moratorium period of 3 months, what happens? Because that is also important information. I may not take the money now if nothing happened after the 3 months, because all I would have done is gotten myself into more debt and no way to resolve my issue after 3 months. So please, people, think about this as a 9 to 12 month decision, not a 3-month decision. And therefore you want to understand what happens afterwards.
Okay. So take us to the 7th point. I'm seeing some questions coming up. So our bankers were on the 2nd week, and they spoke about their relief packages. You can look back on that program. All of the relief packages are available on the PSOJ website. But also, please make contact with your banker, have the conversation, have those hard conversations with yourself, and get the detail. I'm seeing a question from Christopher. Christopher, we're going to jump to your question shortly. Nevada, tell us what is number 7.
Okay.
We talked about
Yes. What this is the likely impact on your credit rating. Now, I'm going to say that not many people in Jamaica, not many SMEs, even realize they have a credit rating. The credit rating is how a lender will assess whether or not you are good for the loan that you're about to take out. Now, this credit rating, and I think we're having John Sinclair later in the program, so he will give them more detail about what's in a credit rating. But one of the things that's in a credit rating is if you didn't pay, right? If you didn't pay some of your payments for like 3 months, under normal circumstances, that will negatively impact your credit rating and say that you are not a good borrower.
Circumstances, yeah.
Under normal. No, in the COVID situation, the bank has actually offered you the ability to not pay for 3 months. Therefore, you need to make sure that however they are reporting it or not reporting it, right, it is not showing up as negative on your credit rating. In fact, I would ask for it in writing. Based on you taking the moratorium, your credit rating will not be deteriorated based on this. In fact, at the end of the moratorium period, your credit rating will be exactly as it was before the moratorium period. No,
so
you will hear pushback from the banks and some of the people, because when I've asked the banks, would you be willing to give this? And I'm like, well, I don't know if I would give that, but I'll tell you something.
This is something that we can ask for.
Yes, but I'll tell you something, that even if the bank does not give it to you, I would write the letter and say, I need you to put this in my file. You need to put this in my file. I would prefer if the bank countersigns this, but even if you don't countersign it, it is in my file. Because what you don't want, and John will talk about this, right? Later, when you go to the credit bureau or try to get a credit rating, and you find out now that there's a big X because you never pay the 3 months, and now you're not thinking about that, but you never remember, say we did say, you don't remember that we did, yeah. And that will help who? Not you, right? So be clear.
Just so that our viewers just fully understand, because what we want to ensure is that you have to have, so this is not a blanket situation with all of your banks. All of these are situations that you now need to have the conversation with your bank. So what we're guiding you on is you want to know what your payments are going to be. You want to know how things will change, if things will change. You want to know if your credit is going to be affected. And those are things you will have to consider as you are making the decision. And your banks are there, go in and speak to them. We are going to have John Sinclair on the show, and he's going to be talking to us about this whole concept of your credit score and credit with time. So he will address those questions. Nevada, I want to start to take a question now. I know we have a question from Dr. Delia McDaniel. So we're going to take Dr. Delia McDaniel's question. But before we take it, I just want to acknowledge a question here, because I think we're going to have to deal with it, if not now, but later on in the show. And this is a service question. What about if your business is heavily people-centered, like an HR hiring firm or talent agency, where income comes in monthly based on how many persons are placed? Do you borrow months in advance to pay talent on time when customer payments are late due to COVID? That's a question from Christopher Durrell. So we're acknowledging the question, we're going to get to it. But we're going to look at a video question now, Dr. Delia.
Hi, PSOJ. Car companies, in collaboration with banks, are now offering new cars, with us not having to start repayment until January with no extra interest. Is this a good idea?
Okay, that's a classic question about the deal that I'm being offered. Okay, we are in strange time, COVID time. The question that Dr. McDonald is asking is actually the wrong question. And I'll tell you why. She's focused on the deal from the car company. But I'm saying focus on your situation. So here's the question that you have to ask yourself. What do you know with absolute certainty about your situation in January? Is your job that secure? Is the revenue and costs associated with your SME that secure? If your situation is secure, you can, that's a great deal to take the car, no payment now, come January, and start paying in January. Fabulous deal. do it. And in fact, a lot of the car companies are even saying, name your price, and any reasonable price can be accepted, right? So this is a good situation. But let's back up again. What if my SME is not 100% clear that I'm going to be fully in business in January? It's not 100% clear that my job is going to still be active. In that situation, I then would be very cautious. You know what I would do? I wouldn't do it now, because these deals also will be around for a while. I would wait till September, because in September, I would have more visibility into what my financial situation is going to be in January. And therefore, let me delay that decision, because what is that? That is asking me to project from now, we're in April, through to January. No, in other normal circumstances, sure, that's a good deal. But as I said, we are in economically turbulent times. We don't know if we're 3 months, 6 months. And remember, even if I'm okay now, in 6 months could be very different.
Yes.
So, Dr. McDaniel, don't worry so much about what the deal is. Worry about what your situation is and what kind of visibility you have into your own situation.
For January, not
January,
for now.
not for now. And I would wait. Yes.
I think we have another video question, and this is from a restaurant owner, a chef and owner of Ribcage, Gariel Ferguson.
Hi, PSOJ. I'm a restaurant operator, and I would love to hear your thoughts on persons operating in a high-cost retail environment. Should they borrow money to maintain their status or position there? Or should they, wait it out? Should they move on until things get better? I would love to hear your ideas.
Nevada? So Nevada is joining us shortly. He's coming. You're back.
Yes, okay. Another situation now where you can say, again, it depends. If you have a small, intimate, indoor restaurant, I would say that the chances of that kind of space becoming viable in the near future is harder. Again, because of remember now, we're also dealing with psychology, right? And the feeling of an intimate restaurant in a location, all indoors with air condition, is not one that's going to come up right away. If on the other hand, your restaurant is open terrace, open door, lots of space where people can spread, you have a better chance of coming back earlier. So what I would do is, if I'm in the restaurant business now, I would focus on building takeout and delivery, spend money on the website, making fabulous graphics to make your food look. Remember now, most restaurants don't spend time thinking about the photography of the food. Now you have to think about the photography of the food. You want to show videos of the chef cooking, right? And then you're projecting and imagining people having this dinner at their house. So you're running ads that show people the food arrive and everybody happy and the table set nice and in a different way. So your business is food. Now you need to reorient the delivery, because it may not be in that intimate setting that you're creating. You are encouraging the intimate setting or whatever it is at home. So really, really rethink where I would spend the money: website, marketing, delivery, takeout, that way.
And the question is, as we said earlier in the show, how much cash do I have now to manage the situation? How much will I actually need in 9 months? Will my business actually make it through to the 9 months? Is there any demand for my business? And how much do I need to borrow to make up that 9 months or 12 months? So never mind. Thank you so far, because I think at this time it would be useful, because I'm seeing some questions from our viewers. So we'll take a lot of those questions at the end of the show, because we want to add some more meat to it, because people are asking, how does credit reporting thing go?
Yes.
We are going to be joined, and in fact, we're joined now by John Sinclair, who is the CEO of CreditInfo, and he is going to be telling us about this whole credit reporting, credit score. John Sinclair. Hi, John. How are you? John's mic is muted.
My apologies. How are you doing? How are you doing?
How are you? Great to see you. Glad to see you're staying safe during COVID. And I know
trying to be.
I've been coming into you as credit as a credit reporting. People want to know, how is my credit affected? I want to start with a simple question. What is a credit report?
Okay, so think about a credit report like a report card on how you manage your finances. Basically, it's a historical record of how and when you pay your loan obligations, how much debt you have, how it is being serviced, and of course, how you're managing all your credit accounts from one or multiple financial institutions. It then produces a credit score, it's a 3-digit number, usually between 250 to about 900. And then the different lenders or financial institutions or MFIs per se, what they'll be doing is they'll be using that score to determine your risk level and as such the type of offers that they would want to give you.
Okay, that's interesting how you put it, John. But me never tell you anything. How you know how to calculate my report? I never report them to you. How you get that information?
All right. So the nature of our business is that we have an agreement with all the lenders, registered lenders and financial institutions to provide us with loan data. And then the objective is that we will share that with the financial industry or the financial sector so that they can make the right decision when lending an individual. We are regulated by the Bank of Jamaica based on Credit Reporting Act 2010, and it has all of the different attributes that we need to follow to ensure that we are doing what we have agreed to do, which is to provide the financial sector with a service in terms of credit and risk rating. Okay.
So if I get a score, you said the score is between 250 and 900.
Yes, somewhere about that, yes.
The bottom score is the good score, the top score is the good score.
The higher the score is the lower the risk. So you want the highest possible score.
So you want the most points for having paid your bills on time, made your loan payments on time. So you would have had to actually have some kind of activity going on. You'd have had to have a loan, or that you are registered with the utility company or so, paying some kind of purchase.
Right. Or even, typically for the businesses that would have just started up, the easiest way to start to build credit is by getting a business credit card. And you service that credit card, you don't max it out, because when you max out the service ratio on the card, that will affect your score. You try to keep it within a lower limit, but you service it properly, and that will build your history, and as such, improve your credit score.
Should I care about my credit rating as an SME?
Naturally, because two things. SMEs help to build the economy, and that's a fact. But at the same time, not everybody is privileged to have loads of money, access to money to build out the business that they have to borrow. As we are a growing economy, and we're trying to strive to be first world or utilize first world mentalities, the different lending institutions use the credit report to ensure that the SME that they're lending to will repay the loan. There are a couple of things that we'll have to look at. One is the ability to pay, which is determined by multiple factors depending on the institution, like your cash flows and your assets. But of course, is the aptitude to pay. Are you, even though you have all of these things, are you willing to pay? And that is what the credit report will provide to the institution, along with the ability to pay. So yes, you have all of the assets, you have the cash flows, you provided all the information, but are you willing to pay? How are you performing with other institutions? And based on that, the institution will make the decision to lend you some money.
Okay, so as our SMEs are considering things like taking notes, can I get a copy of my credit report? How do I go about getting a copy of my credit report?
All right, good question, Rochelle. So based by law, every company and individual are entitled to one free credit report in a calendar year. Simply, you can visit our office, or you can visit our website. We are located in New Kingston, and on the 9th floor of the Towers, 25 Dominica Drive. Our number is 633-7023, or you can visit our website, complete the application form, and somebody will contact you, or we will send you your credit report in 24 hours.
Okay, so viewers, we're talking to John Sinclair, who is the CEO of CreditInfo Jamaica. He's telling us about credit reporting and how you can actually get a copy of your credit report. John, can you just remind us of your website?
Sure, so our website is jm.creditinfo.com.
Okay, jm.creditinfo.com. So I am an SME. If I were to take a deferral or a moratorium on my loan during COVID, how is that going to affect my credit report?
All right, so let me start first with the fact that, you know, when we realized that the COVID situation was going to impact Jamaica, we would have started to reach out to all the financial institutions and lenders who would be offering some type of moratorium or payment holiday or skip, depending on what you want to call it. We have also been in contact with the PSOJ following their website to ensure that if we had missed any financial institution, we could contact them. What we are doing with them closely is ensuring that the information reported to the Bureau is done accurately, efficiently, so it does not negatively affect a customer who would have gone into an agreement to take a payment holiday or a skip. What I think Nevada had mentioned it, but essentially what we're asking them to do and what they have all agreed to do, because this is a payment holiday has happened before COVID. It's not novel to the current financial situation, but basically we take a snapshot of your status as at a point in time. So if you had no delinquency, you had good payments up until March, you get into an agreement with a financial institution to take a 3-month payment holiday. When the 3 months would have expired, you're going to continue exactly where you left off. So what we're doing internally at the Bureau is we are continuously checking the information provided to us, especially with the institutions providing the skips, to ensure that it is reported to us accurately. So at the end of the 3 months, we don't have any negative impact on our customers.
Okay, so what we are also recommending is that our SMEs, when SMEs go in to speak with their bankers, that they do ask the question about any effect that it will have on their credit report if they should take a deferral. But what you're saying is what has been agreed is that it should not affect your credit report, because what will happen is that there's supposed to be a snapshot. But that's something, though, that we have to ensure that as the SMEs, we follow up and we ask the questions and we get those guarantees.
That is correct, Rochelle. What I'd also recommend to the SMEs is when you're a month or two after you have completed your obligations for the payment holiday or skip, just check your credit report. Come to our website, give us a call, visit the office if we are open, because we're doing everything digitally now, and check your credit report to ensure that the information being reported from the institutions that you would have gone into some agreement with was done accurately. We have an able team to help with disputes in the event that the information was not recorded accurately. Okay.
And as John had mentioned earlier, every calendar year you are able to get one credit report free.
Correct.
How much does it cost normally?
Roughly about $1,000 or so.
Jamaican dollars?
Jamaican dollars, yes.
So I could go to your website, put in the relevant information, and I could actually get back a credit report on myself if I go to do it right after this broadcast.
That is correct. We'll send it, well, based on it, you get it within 24 hours. You definitely get it sometime tomorrow, before 12 o'clock.
Okay. And you also mentioned that we should post the payment holiday. We should check to make sure that the credit report is reflective of the agreement, that there was a snapshot taken at a particular time and it now resumes. So we can just go to your website or come into your office to now check that credit report to see what has happened.
Correct. So what would happen is you would have gone into some agreement on a specific contract, an unsecured loan with a lender, and you would have decided that you want to get a 3-month payment holiday. When you check your credit report, that specific contract should not have any negative payment data for the period that you would have gone in an agreement with. And that's essentially what you're checking on.
That's what you're checking. So So some of us may be asking the question because we're wondering how, when you're looking at that reality of my financial situation and making the decision to take a loan, if my credit report is closer to the lower end of the scoring range, can it be fixed?
Yes, so there are multiple opportunities to fix your credit report. We essentially provide a repair service that you could call us. It's a consultancy, and we work with you to get it corrected. However, the banks also, some of the financial institutions, not all, also provide that service. And there's information on our website, but there are basic ways to improve your credit quickly. One, start to pay your loans on time and regularly. A misconception is that I came into an agreement to finish paying my loan in December. It took me an additional 6 months, but I paid it off. And as such, I expect that this information would not be reflected on my credit report in a negative way because I did pay off my obligation. It will be because the institution will report that you did not pay for whatever period in time. Of course, what we also recommend you do is you can also speak to your financial institution about refinancing. If you have a credit card, you ensure that you don't max out the credit card. You keep the payments, you keep the usage low. The lower the usage and the limit is, the better for your score. And you find very creative ways to rebuild your score. It will happen over time, but the fact is that if you have a bad credit score now, it doesn't mean that you're going to carry that credit score for life if you put measures in place to improve it.
Okay. Because, John, I know some of our viewers are saying to themselves they're almost a little nervous to go and check it because it feel like you did an exam and you're not so sure if you get an A or you get a D. But the fact is that even if you're closer to the D, it is something that can be fixed. And notwithstanding COVID, as you're making those decisions, those financial decisions, these are some of the financial decisions that you want to start looking at to come on the other side of COVID. And John, I just want to, because I know you're going to be backstage for a little while we talk with Edison, because we know that there's some questions from our viewers about credit reporting, but I just want to know what other service you mentioned. You offer a repair service because when the credit card breaks down, you are like the credit mechanic. What other do you offer to SMEs?
Okay, so we offer quite a few services to SMEs. So for the non-financial SMEs or the non-lenders, which would be typical borrowers, so the restaurants and the hoteliers and all the stuff that Nevada would have mentioned, we offer obviously our credit reports. We also offer digital onboarding systems. So we're not just a bureau, we also dabble in the space of fintech and innovation. So we offer digital onboarding, which requires a customer to take a selfie and validate their IDs across the different relevant reference databases, and then you can onboard them into your different systems. And we offer data analytics and data cleaning. We offer ID validation and consultancy, amongst others. Again, you can visit our website. And then for the financial institutions that are SMEs, like the credit unions, the smaller lenders, the MFIs, we offer automated decision analytic tools so that you can quickly onboard customers into your decision-making process to extend credit, risk consultancy, custom scorecard development, portfolio monitoring, benchmarking, which is a tool that we're going to be promoting next week, which allows you to measure yourself against the industry and your competitors. So we'll have quite a few things for the SMEs as it relates to bureau services and innovation.
They can visit your website and the SMEs will get that information. We just want to thank John Sinclair for giving us a short lesson there in credit reporting. As John mentioned, you are able to get one free credit report per calendar year, and otherwise it costs about 1,000 Jamaican dollars. You can visit the website for CreditInfo. Right now, because of social distancing, we're not really promoting you coming out of your house to go into the office.
No, so you can access us digitally. We have turned on our digital channel, access us fully digital.
So please send in your questions. John is going to be with us for the end of the show. So right now we're going to be joined by Edison Galbraith, who is the General Manager of Loan Origination and Portfolio Management for the Development Bank of Jamaica, the DBJ. Welcome, Edison.
Good afternoon, Rochelle.
Hi,
Thanks
Edison.
for having me.
Yes, and thanks for joining us this afternoon. Edison, you are the loan origination and portfolio manager at DBJ, the general manager of this. Can you tell us a little bit about the major programs that DBJ has at this time to support SMEs? Because SMEs are asking the question, you know, where else can I go for support? What products do you have for SMEs at this time?
Okay, so essentially COVID has come and hit all of us, taking us by storm. We've looked at the surveys done by the JBDC, JMEA, JHTA, various surveys showing that SMEs basically have been, I mean, those that haven't been locked down have been substantially slowed down.
Yes.
So we, over the years, have been lending to thousands of micro, small, and medium-sized businesses, providing them with vouchers to help them get their businesses up and running. So right now, where we are, we have a portfolio of about $16 billion, which is predominantly small and medium-sized enterprises, as well as micro. So in looking at our COVID strategy, we've broken it into two phases, really. The first phase being the relief, as it relates primarily to the existing borrowers, persons who have existing credit facilities or are already up in business. And as it relates to the relief phase, one of the first things that we have done on that $16 billion portfolio is we have reached out to all our lenders and told them, look, DBJ is able to do rescheduling of these loans. So we've had requests coming in for moratoria, for payment holidays, which you indicate is interest and principal. And these range from 1 month, 2 months, all the way up to 12 months. So the way we're approaching it is we're using
facilities with the DBJ.
Right, facilities funded with DBJ funds. So we're allowing that kind of extension because we are fully aware that, I mean, we look at the tourism sector where you have persons who might have a bus. They bought a bus to transport tourists. There's nobody to transport right now. So for the next couple of months, they'll have no income. I mean, there are some options to pivot. And in that regard, we have our voucher for technical assistance that allows business service providers who are consultants, really. We'll provide grant financing to help businesses reposition, look at the short-term situation, look at the longer-term situation. I mean, none of us has a crystal ball as to how long this relief part of it will last. So we understand that working with our financial institutions, we are allowing that moratoria on loans, on loan payments. And also some of them have approached us and we've been providing working capital financing for SMEs that see an opportunity to stay open and to keep going for a little bit, but they do need that short-term support.
Okay, so Edison, so some of our viewers are now saying to themselves, this DBJ, I heard about DBJ, I hear about the Credit Enhancement Fund, I hear Edison talking about vouchers. For those persons who have not availed themselves, who have never considered even whether or not they're eligible, can you tell us a little bit about this Credit Enhancement Fund? How do I become eligible? What do I do at this point?
So really, and the CEF has the Credit Enhancement Fund, CEF we like to call it, has been around for a couple of years. We've done over 700 loans that we've supported, $3.5 billion, allowing small businesses over $8 billion in loans. So it has been around and it's been used by 15 of our lenders to date. So
and when you say lenders, what type of lenders are you talking about, like the financial institutions?
Financial institutions, it includes commercial banks, credit unions, microfinance companies, etc. So it's a range of institutions that have used the facility to support small and medium-sized borrowers. So in terms of accessing the CEF, we do have a
Right.
website,
So
right?
if I'm now hearing exactly. Hold on. Mm-hmm.
Right. So we do have a website, dbjcef.com, which has a lot of information on it about what the products are. So as far, right. So SMEs that need funding can access guarantees of up to 90% on their loans. So we've seen, for instance, some of our lenders coming in at this point to say, all right, I'm making a loan to an SME. It's an existing client and they need 3 months working capital right now. Their collateral is fully utilized, but I have faith in this SME based on our track record and the history that we've had with them. So we want DBJ to support with this guarantee. So we've been doing some of those transactions as well.
Okay. So Edison, for those persons who are not fully comprehending how this works, the application for the CEF, that is done through your interaction with your financial institution, or do you go directly to the DBJ?
Okay, so the guarantees processed when a SME goes to a lender, credit union or bank, and they are being considered for a loan. The bank says you don't have enough collateral, so then they apply on behalf of the SME for that guarantee. The other thing is we do a fair amount of marketing around the CEF because we want the public to know that it's available. So we engage directly with SMEs to say, you can qualify on this basis for this. And as a result of that, they very often go to the institutions and ask for the guarantee, knowing that it can provide coverage for them. We've just put in place an automated platform where we allow each of our lenders a portfolio for the year. So they can just automatically approve it. It doesn't have to come to DBJ. They'll have a portfolio of, let's say, $1 billion in guarantees for SMEs for this year. And within that portfolio, they're free to approve guarantees without coming back to DBJ for each one.
So they would then make the considerations based on the SME's credit history and so on. So that would go on through the financial institution.
Right.
So in terms of because based on that platform, does it mean therefore that the process can be a pretty short process to see whether or not you will qualify to get that CEF facility?
Yes, it will, because we've cut ourselves out of that equation. So once the credit union or bank approves the loan for the SME, they already know that they're providing, this is part of their security package. So we've cut DBJ's processing out of that. So once they've approved it, it's instantaneous.
Do you have any general advice or any kind of words of how best to navigate even the use of the CEF funds that you want to share with our SMEs? What question do they need to go in to ask their bankers?
I think at this time, I mean, we're looking at we're still in the COVID relief phase. So what we're seeing predominantly is working capital support. So a lot of the questions which, I mean, you've been asking and sharing over the couple weeks, the whole issue of the ability of a business to generate revenue in this time. What costs can they save? Because liquidity at the end of the day is the in and out. Cash going out, cash coming in, how you balance all of that. So they have to be in a position to see down the road that the business can make it at the end of the 3 months. I mean, yourself and Nevada went through a bit of that at the beginning of the show as well. So those are some of the issues that an SME would need to go prepared to have that discussion at their bank. And in that regard, again, our voucher, where we provide grants of up to $200,000 to assist with things like business plan, reorganization, all of these things can be accessed. And again, we have a platform online, which is dbjvoucher.com. So any SME that's registered can go on that platform, apply for a voucher, pick the service provider of their choice. There are about 30 different services available. But right now, we expect that persons will be doing some kind of reorganization plan. So that's available for them as well.
Okay, so you say any registered SME. What when you say registered, what do you mean?
Right. So to access the voucher, the
Yeah.
SME has to be registered with the Companies Office of Jamaica. So they're either registered as a company or trading as a business name.
Okay. And SMEs, we have actually been encouraging formalization of your business with registering at the Companies Office, and we're actually going to do an episode on it. But these are the times that this kind of thing comes up, whether or not you are registered and you are accounted for as an operating entity. I see a question here from my namesake, Rochelle Pinnock. Rochelle, we're going to get to your question shortly. I'm actually, Edison, I'm going to bring back in John and Nevada at this time. We have 2 more questions. I have a video from Nina.
Hi, PSOJ. So I have 2 questions for you right now. When is the food and beverage manufacturing sector expected to be fully up and running? And what should the suppliers to this sector anticipate right now?
Thanks for that question, Nina. You know, food and beverage is one of those that I think, while it may have slowed a little, and certainly related to food and beverage supplying the tourist industry, would have had a more dramatic drop off. That is one of the that I would say is a core business. So if you do something, if you supply, if you do this delivery for food and beverage, or if you do pallets, for example, where what the things that forklifts and stuff that the food travel on, my guess is even if you've seen a temporary downturn, in short order that will come back pretty soon, and you'll have to be supplying, because supermarkets and all of that kind of stuff, that's standard core business. So those would be the kind of industries that would come back very quickly, I would say. So hold your corner,
and they would be
yes.
Okay. So viewers, we are joined by 3 gentlemen: Edison Galbraith, who is General Manager at DBJ of Loan Origination and Portfolio Management; John Sinclair, who is CEO of CreditInfo Jamaica, and a very familiar face on COVIDCast, or lead architect at the PSOJ SME project in Nevada, Powe. So we're going to be answering your questions now. I know we have another video question, but I'm going to take a question from our live comments. Rochelle, and I'm going to take Rochelle's question because I like her name. During the pandemic, SMEs are not able to properly service their debt because of limited liquidity. After the loan payment holidays, some SMEs will still have to continue restructuring and may not be able to service debt for months after. What protections are in place or should be in place to mitigate against SMEs' credit rating suffering significantly as a result? John, this sounds like your question.
Kinda yes, kinda no. So for me, for CreditInfo, for the bureaus in general, remember we basically just collect information from the different lenders. So to answer Rochelle's question, this would have to be a conversation between you, Rochelle, and the lender to see what type of restructuring facilities you could put in place to mitigate against negative data or missed payments coming or reported to the bureau. We are not in the position to manipulate or freeze data per se. What we basically are commissioned to do is collect the data from the institutions and then process it to generate a score. So that's a question that you really would need to. That's a conversation that you really would have to have with the lender itself.
And Rochelle, earlier in the show, Nevada actually went through, in fact, point 6 of the factors to consider. In fact, point 7, what is the likely impact on your credit rating? If you are not currently receiving or memos that goes through these kinds of questions that you need to ask the bank, because it is something Nevada mentioned earlier as a question you need to ask your bank. Will my credit rating be affected? And he also suggested that you try to get this in writing. Please subscribe to us at SME at psoj.org so that you can be in the list to receive the weekly PSOJ memo. Nevada, is there anything you want to add to Rochelle, to what John mentioned?
Yeah, no, it's the thing about it. Remember, the other question that you need to ask your bank is, what happens if I still can't pay after the 3-month moratorium? Make sure you have that question answered before you take the 3-month moratorium. Don't wait till the end and then say, oh, look, so that's what I said. Really think about it as a 6-month, 9-month thing. And therefore, any discussion you're having, the 3-month moratorium, you need to immediately know, and then what? And as John said, what the bank reports is what John is going. He cannot change what the bank reports. So your negotiation about what the bank is going to report has to happen with your banker.
Correct.
Okay. And John also mentioned that you can get a credit report. You may want to get a credit report to know your standing right now, so that you can do a comparison when your loan payments are to end. Or sorry, when your moratorium period
is to end. Yeah.
Correct.
Let's take a question now from Amanda.
Hi, PSOJ. I have a question on behalf of a friend of mine. She owns a small hotel. She has over 100 deposits of individuals who had planned to come to Jamaica this summer. Now, most of that money has been used, and she is seeking advice as to whether or not to take a loan so she can pay those deposits back due to COVID. You can let me know what your response is, and I can relay the message.
Oh, that's a great question, because a lot of businesses are in that situation, especially in the tourist industry. Okay, before you take a loan, and this is where clever management is going to come in, I would actually take out that list of all those clients for whom they're not going, and before them call about refund, I as the owner or the manager would actually call them one-one. And here's what I would say. You are expected in my hotel in June, right? It's likely, given what I'm seeing now, that you may not be able to come in June. Now, to be honest, I have the money that we have from you as a deposit is what we're going to use to maintain the property and to keep some of my staff on working during the period. If you have bought 4 nights of hotel, I am going to give you 6 nights that you can take anytime over the next 2-3 years. And you just call me as long as we are not full, we will take you. So when there's low season, high season, whatever. Why? You don't have to then go find cash to pay back that client. You have sold something, you've swapped out something that's of little value to you, because an extra 2 days added to 4 days worth of a room is of less value to you than having money now. And you actually have made somebody very happy. So they can then look forward to a 6-day vacation. Suppose, or you could also offer, say, right now you bought 4 days a room. What I'm going to do is put all your food and beverage for the 4 days on it. All I'm asking you is that you don't ask back for your deposit now. It becomes part of your future investment of your holiday. So don't just give up and say, Lord, what going to happen now? And I have to go find this money to go pay back, which of course you don't have, and then to go borrow. I would sit down one evening, one day, call every single one of those customers who are coming, tell exactly the same story, make exactly the same offer. In fact, a couple of hotels have talked to the PSOJ, and we had given this advice. And in one situation, for example, the hotel said nobody, when they explained that story and made that offer, none of the people took back their deposit. So it's very powerful. So don't rush to give back. Don't rush to give back money that you don't have to yet. And don't, definitely, if you can help it, don't borrow to give back money, because again, that's a situation where you're taking money to use it for something that's not going to be earning money. Try other ways. Be clever. What can you offer somebody now that you're able to hold on to their deposit?
Okay. Thanks for that, Nevada, because it's just a reminder to our SMEs that all is not lost. There's, as Nevada mentioned, it is clever management. Please send in your questions. We will be answering and making suggestions. I'm seeing a question here for John. What is the difference between due date and closing date? How can I use the closing date to improve my credit score?
Okay, all right. So the due date is the date that you would have an agreement with the bank to complete for the completion of your loan. Closure date is the date that you would have closed this loan. So you can close the loan before the due date, or you can close the loan after the due date. Closing the loan before the due date gives you a positive score, a more positive score. And closing the loan after the due date means that you would have gone at least a couple of days or months delinquent, and then that would affect your score in a negative way. It is always not encouraged to pay off the loan too quickly because you want to build some type of history. However, closing it a little early can create a positive impact on your credit score.
Okay.
Can I just go back? Can I just go back a little bit though to the issue of rescheduling?
Yes.
Because we're seeing where banks are rescheduling loans, notifying the clients that loans have been rescheduled for 3 months, 6 months, or 3 months, and then an additional 6. So it's on the bank and the client have agreed this, and they would have adjusted their loan agreements for that. So I just wanted to find out from John, from the credit bureau standpoint, once the bank has agreed the rescheduling with the client, certainly it should not affect the client's credit rating because it's agreed between both of them. So if there's a 3-month payment holiday, right?
So to answer that, good question, Edison, I think it would provide good clarity to the. We have again been working closely with them to ensure that the right information is reported to the bureau, so that new closure date would be reported to us in the next data dump or the data reporting period. And as such, the extension of the tenure of the loan would also be reported to us. Therefore, the due date and the closure date should be in line. Again, this is why we're putting measures in place to ensure that we do check the data, the files when they come in for the lenders that are providing a moratorium, so to see if there are any changes in the data sets that will not, so that it will not impact the customer in a negative way. So that is something that we're monitoring closely because again, the customer would have an agreement with the lender. And we don't want after 3 months or 6 months you're seeing this negative reporting because of a closure date issue.
Right.
Hey,
because
go ahead, guys.
I'm just saying because since March we've been telling our SMEs to go to your bank, open your books to them, be honest with them, tell them, look, this is what I see coming down the road. We've been saying to our lenders as well, approach your SMEs. Be open. We know that it's going to be a tough time, and I understand that, for instance, the regulators have provided some guidance as well as to how loans that were good prior to COVID can be treated going forward and still be good even with the rescheduling. So I'm happy to hear the clarification on that one.
Okay.
That's right, Edison.
On the floor, because the question that has come in to me is in regard to the guarantees that the DBJ provides. SMEs want to know if you default on the loan, what happens?
All right, so it's a partnership. It's a 3-way partnership, really. Everybody has to have some skin in the game at the end of the day. So the SME is the one borrowing. You don't want SME to walk away from the debt and say, hey, I got this free $5 million and I'm not going to do anything about it. The bank has to have some skin in the game as well.
Yeah.
Right. So if the loan goes into default, then DBJ will, if it's a $1 million loan and 800,000 is guaranteed, or DBJ would pay to the bank that 800,000. We have a clause though that we require the bank to still work with SME to bring their account current. So it's all partners have to be in the game. There's nobody who can just get up and walk away from it. DBJ can't walk away, the lender can't walk away, and the SME cannot just get up and say, hey, I got some money last month and that's it, tata. So it's a partnership.
All right. Thanks for that, Edison. Nevada, I have a quick question here for you. Now, you have said that people need to be asking themselves those financial decisions and how much cash do I have currently available? So if an SME has stocks, should they sell those stocks and use that money to run the business, or should they take a loan?
All right. So honestly, it depends on the kind of stock that you are holding. As we said, some of these food businesses, they're probably going to do reasonably well. For example, if you're holding Amazon stock at this point, you don't sell Amazon stock in this environment to support your team, because Amazon also is growing like gangbusters. So it's very much about what is the type of stock that you have, and what is the opportunity that your business represents vis-a-vis the movement of that stock. Because you actually could be more secure with the stocks that you're holding than you are with your business. So again, it's very much dependent on how do you believe in what's going to happen with the stock versus how do I believe what's going to happen in my business. Again, the cruise ship, cruise ship business, make it stay. I'm holding on to the stock. A hairdresser business, all right, I may sell the stock to support the business because that's coming back, right? Is that trade-off? Rochelle, we just got a poll in about how many people are planning to borrow money during the pandemic. 32% said yes, 41% said no, and 27% said maybe, that they're watching and seeing. So most people actually are going to try and avoid not to borrow, 41%. And then 27% said maybe, 32% said yes, they have to borrow.
Nevada, I have a question for you, because as some SMEs are making the decision, some may be asking themselves, is borrowing a bad thing? Because we're not saying that borrowing is a bad thing.
No, not at all, not at all. But borrowing is a good thing when the reason that you are borrowing will create more of a return, will give you a higher return on the money than the amount that you have to pay for the money. So if I'm borrowing at 7% interest to do something with that money, whatever I'm doing with that money should be paying me at 20%, 25%, 30% at least or more return. What you don't want is I'm borrowing at 7%, and then whatever I'm doing with that money is giving me 1%, 2%, right? So the issue is borrowing is good if whatever you're doing with that money is going to return more than the rate at which you have borrowed the money.
Okay. And Nevada had made the point earlier that there are certain considerations that you should make when you're borrowing the money. So if you're borrowing the money to pay rent, that is not necessarily the best borrowing decision, because you should be borrowing to actually use the money to be earning revenue. I'm seeing a question here for Edson from Simone Bannon. If a DBJ loan just came through and now I'm expected to start paying back on the loan next month, however, my business has been closed for over a month now, it makes no sense using the loan to pay the loan. What should I do?
Right. Again, thanks for that question, Simone. Just like, again, any business that has a loan from their institution, we encourage you to go in, open your books, open your records, open your projections, your outlook, sit with your bankers, explain to them exactly what you see down the road. As I said, none of us has a crystal ball about when this thing will end. And I'm going to say something very controversial in that lenders also know that if you can't pay, chances are it's not the best time to be closing you down, because you've had a wonderful relationship with them for so long. For the next for a 3-month glitch or a 4-month glitch, it doesn't suit any of us. So we all have to work together, and lenders are very aware of that it may not be the best time to try to call a loan, close out, but at the same time, the SME has an obligation and a duty to go to that lender and say, look, I owe you money, I borrowed the money from you, and this is what my forecast looks like. If this happens for 3 months, then in month 4, 5, 6, I will pick back up. But go and have that very frank discussion. There's no point in avoiding the lender, go and open yourself to them and tell them, look, and a lot of them are right now doing moratoria payment holidays, because we all know as lenders as well that it's not the SME that causes problem. It's a systemic problem. It's a global problem. So there's no point in cutting off and trying to lock down and seize and all of that. But we do want our SMEs to be fully committed at the same time to recover, pivot, cut what they can cut, and make sure that they honor their obligations as well.
Yeah, and Edison, that's a great point, because we did have the financial institutions here on our second episode, and what was very clear is that there's a recognition that everybody has some skin in this game. So the pandemic is not affecting some of us and not affecting others, it's affecting everybody. So it's important that our SMEs remain viable, but you need to have that conversation. Christopher Durrell asked a question very early in the show, and Nevada, this question is for you. What about if your business is heavily people-centered, like an HR hiring firm or a talent agency, where income comes in monthly based on how persons are placed? Do you borrow months in advance to pay talent on time when customer payments are late due to COVID?
Yeah. Okay.
Very
Again, everything is these calculations. And at some point, Rochelle, I don't know how we're going to actually have to help SMEs do some of these calculations. First thing I need to ask is, when is the money likely to come in? Meaning, how long am I going to have to borrow this certain amount of money, and at what interest rate? And then, is it worth it if it's 6 months, 9 months long before I get this money? Sometimes you may have to walk away from revenue if you don't want to take on a situation where you're going to borrow more than by the time you get back the money. No, if you're in a talent agency business, and let's just say you should be doing exactly what Edison said, right? Where can you shrink? Where can you manage? What can you cut? And where can you pivot in the interim, right? But separately from that, the issue is also, you don't want to keep your business so big that you end up so it's the size of the business and the length of the receivable, how long people are going to take to pay. You don't want to be carrying a massive working capital thing in this particular period, because your risks are much higher. The risk of a long receivable that you had a year ago is much less than one today. If somebody's not paying you for 6 months, the chances of them not paying at all is actually higher than it was a year ago. So you have to be careful that you're not in a situation that you have borrowed money on the presumption of the receivable coming in, and then you get caught with a working capital situation. So all of these are very, very nuanced, pen to paper late at night, and then you have to guess. You have to say how it feel, how this receivable feel, what's happening with that company that owe me, what you hear, how many people they lay off. And if they've laid off a lot of people, you hear them not paying all their bills. In your own mind, you have to say, all right, not that you're not going to try and collect. You will still try and collect. But in your own mind, you're going to say, you know what? I'm not getting that. And therefore, assuming that I'm not getting that, let me figure out what is my operational arrangement with that kind of calculation in my head. But praying and hoping, you know what's going on too, right? Out there. So being clear to yourself as to what are the chances you're going to collect that receivable.
Okay, so as we're coming to the end of episode 6, and we're looking today at the whole concept of how much liquidity am I going to need? Should I take advantage of a bank loan, a payment moratorium, or a payment holiday? Should I have my payments deferred? We've looked at the various issues to consider, and again, if you have not been in receipt of our memo, and we have a memo this week that goes through all of the factors, Devada is going to go back through them. Please send us an email at sme@psoj.org so that you can be on the weekly mailing list. Now, as we are wrapping up, I'm going to start the wrap up with you, John, with a question from Neil Campbell. How long do collections stay on your credit report if not paid? If I pay amount of an account in collection, how long will it take to be removed from my credit report?
Okay, good question, Neil, and I think this is beneficial to quite a number of persons because we do get this question a lot. By law, the information stays on your report for 7 years, negative or good, and then it is removed. So if you miss your payments, you pay them off after, it still remains on your report for 7 years. Remember that it is like a report card. So an institution would like the opportunity to see how you are performing in the past, because that's what they're going to use to determine if they should be busy with you in the future. So to answer Neil's question, it's 7 years that we would keep the information on your report before it's aged off to add new information.
Okay. And in 30 seconds, John, anything you want to leave with our viewers at this time in regard to their credit reports?
Okay, yes, big recommendation to everyone is to just come in and view your credit. A good credit score also puts you in the power to negotiate when borrowing. So the better your credit report is, the better offers you should be able to receive. I would also recommend that during these times, especially with the moratoriums going around, ensure that your bank ensure you ask all the questions that your father would have recommended, because it is important for you to understand how your loans will be serviced during the moratorium and after. And again, once we have come out of the moratorium, please check your credit score.
Okay, thank you for that. So ask the questions. When we come out of the moratorium, please check your credit score. So that means that you would have had to know if you got an A before the moratorium, you can know where you are at the end of the moratorium. Edison, from the DBJ perspective, any words you want to leave us with? Simone actually had a follow-up to the question that she asked. She wanted to know, she was speaking specifically about DBJ funding. I wanted to know if the same stance applies to DBJ funding.
Sure. So as I indicated when we started out, so the DBJ also allows rescheduling of facilities that our AFIs and our lenders. So we've been doing rescheduling ongoing, 3 months as requested by our AFIs. Each AFI looks at the client, makes a determination whether this client needs 1 month, 2 months, 3 months, whether it's principal and interest, all of those things. So yes, DBJ does provide rescheduling on our loans through our institutions.
All right. And what would you like to leave our viewers with? Many are now very interested in understanding how they access the DBJ funding, what makes them eligible, what information are you going to leave our viewers with?
All right, so first thing I'd leave everybody with is, again, we're looking at 2 phases, the relief phase and hopefully the recovery phase in a couple of months. The first thing is each SME, each business needs to just look at their operations, and on the whole point of liquidity, it's a trade-off between the outflows that you have. Talk to your creditors, talk to your lenders, try to manage those outflows. Look at the inflows as well. Sometimes you might make a big sale during COVID, but you might not be able to collect it until whenever. So you have to balance all of these trade-offs. You might be looking to borrow money to do that transaction as well. So you have to balance all of these things. So one area that we believe can help with that is our voucher for technical assistance. And I'd remind everybody of the website for that, dbjvoucher.com. You can get various services, grant financing of up to $200,000 to support your business plan, your reorganization. It's also a key feature that can assist with the CARE grant for the tourism industry. So the government has the $1.2 billion grant for tourism enterprises. And one of the requirements is that they need to come with a reorg plan to say, hey, this is my outlook at this point. So the voucher can cover that, the preparation of that plan, provide the $200,000 towards that. It's 70% of the cost, so the SME will still have to put up something. But in order to get that money, you need a plan, so you can use the voucher to take you there.
Okay. So thank you, gentlemen. So we have had on our program, we've been able to talk to John Sinclair, CEO of CreditInfo, about credit reporting, your credit report, your credit score, how do you get it checked, and the different things that you can do to repair your credit. And CreditInfo is one of the institutions that can help you to guide you with how to repair your credit. Edison Galbraith, who is general manager at DBJ. Edison has talked to us about the DBJ Credit Enhancement Fund, which is a facility that you access through your financial institution. So go and ask the question, how does it work? Understand your eligibility. What are the requirements for it? You can visit dbjcef.com to get other relevant information. But again, as we keep saying on this show, ask the questions. Be bold. Don't be afraid. You need to ask the questions. There's also the DBJ vouchers that you're able to access at dbjvouchers.com. We encourage you to visit the website of the Development Bank of Jamaica. John, can you remind us, please, of the website for CreditInfo? Because I know people want to log on right now to get their credit score within 24 hours. What's that website?
It's jm.creditinfo.com.
Okay. So as we are wrapping up, Nevada, you had gone through some critical factors for us. I saw a question. So before we get into the wrap up, Nevada, where you can go back through those critical factors, because everybody, we've had a mouthful today. So people are going to have to. This broadcast is going to be available right here on the PSOJ Financial Access Facebook page, so you can rewatch it. You also know some of your friends that you need to share it with, so share, comment, ask us a question, send in your questions to SME@psoj.org, but also ensure that you're on the mailing list so that you can get all of the things that we send out on the various topics. Nevada, should I be using my personal savings at this time to get the business going? Should I take out all of my little money out of the bank to get me through the COVID time as an SME?
Okay, so one of the realities of doing business in Jamaica, as we know, is that many of our businesses, there's not often a clean separation between the personal and the business. We have to just talk the things, right? Sometimes the business paying for the picking them school fee, and there's the mixing and the run, especially the smaller the business is. So again, this situation and the double assessment is the same way you think about it. How risky is your business vis-a-vis how bad is it currently, and what is the likely of it turning around? If it is a situation where it's unlikely to be turning around, again, do not take your personal money and put it into a bad situation and pray, right? You must see your way. Don't treat, if you have personal cash, treat it the same way you would treat money borrowing money from the bank, which is, would you borrow money from the bank? Would I use the pick them school fee and put it into this business situation, which is unlikely to turn around soon, or is very likely to turn around, and therefore I should use it? That really is the trade-off. So again, that's how you think about it.
So Nevada, this is a good time for us to segue into the critical factors, those 7 critical factors that we have put forward from the PSOJ to SMEs to consider in determining whether or not you should take a loan, moratorium, deferral, or even use your personal savings towards business. What are those critical factors? Can you take us back through?
Great. So as you said, there's 7 things that you have to consider, right? First of all, how bad is your situation now? Is the business closed? Are you partially shut down? Or are you mostly operational or pivoted to a new business? First. Second, how soon or likely is your recovery? Is it unlikely for a long time? Do you have a clear, articulated need of some customers will come once you reopen? Or is there pent-up demand for your product or your services, like the hairdresser situation, right? That's 2. 3, what do you intend to use the funds for? Is it to pay rent for an unused location? Is it to preserve staff that you're not utilizing? Those are probably not good situations. Or are you building marketing and muscle and presence to try and get revenue now? That is a much better reason to be using the funds. If you get the funds, how long can you last? If it's only 3 months, I would be wary, because this thing would probably go on longer than 3 months. If it's 6 months, you probably are better off. But even then, I would be still a little nervous, although definitely not as nervous as 3 months. If it's 12 months, you're good. That's a very good situation. If you don't have to go back to the bank to borrow more money for 12 months after you get this amount. Then 5, what was your pre-COVID personal financial character? Are you a person that was always living on the financial edge and always borrowing money and paying your bills late? Or do you usually a person that put away savings and you pay most of your bills on time? The reason for this is we are in precarious economic times. Whatever risk you used to have, that has gone up. In such a situation, you don't want to put additional debt onto your precarious situation. Then you want to ask about how is the bank structuring the loan? Are they putting interest on interest so that at the end of the period, you're going to be out there with holding a whole heap of money? Or will your bank offer you some kind of flexible payment arrangement that will mirror your anticipated cash flow? Where the bank has said, let me work with you. If after 3 months, we're still not in business properly, we're going to just extend it. We're going to do some different things. We are going to mirror what's happening with you as long as you come and talk to me. If that's the situation, you're okay to proceed. That banker has your back versus the one that said, what, 3 months, this is it, interest upon interest. And if you can't pay, well, I'll just come take over your business, right? So you have to watch what your bank is saying. And again, please ask for the Excel spreadsheet, month by month by month. What does it look like? And if after 3 months I can't pay, what happens? Find that out before you take the 3 months. And then, of course, the impact, 7, the impact on your credit rating, right? Are they going to report your missing payments and impact your credit negatively? Or are they going to give you an assurance that your pre-COVID rating will remain? When you've circled all the boxes that apply to you, the way you think about it is, if you have more than 3 red flags, do not take the loan. Do not take the moratorium. If you have mostly yellow, but with some green, sure, go ahead. If you have mostly yellow with some red, no, don't take it. In a situation where it's green, if it's mostly green or with 1 and 2 yellow, sure, you can go ahead. So use this to sit down and do an honest assessment of your particular situation, and you'll be able to decide whether or not this loan, this moratorium is right for you.
Okay. Thanks a lot, Nevada. And thank you, viewers, for joining us again on another episode of COVIDCASTJA. Today, we talked about the whole question of liquidity. How much liquidity do I need to save? We encourage you to stay informed by emailing us at sme@psoj.org so that we can provide you with the information. We provide a weekly email. We encourage you to join us right here every Thursday at 4 p.m. where we go through various issues affecting our SMEs. In fact, next week we are back here. We're going to be speaking with Lysandra Rickards and Dr. Carolyn Hale, because this whole question of keeping your staff motivated and productive while they're working from home. How do you manage leadership of your people? How do you keep them? How do you even know if they are being productive while they are at home? Because this is a new paradigm for many businesses. So please join us next week for a very informative discussion. This week we had with us John Sinclair, who is CEO of CreditInfo, and he went through with us the various considerations for your credit report. We encourage you to check your credit score. Check your credit score ahead of the conversation with your bank, because this is one of the considerations, in fact, that you need to have as you are making the determination whether or not you take a loan, a payment deferral, or a moratorium. There are facilities available through the Development Bank of Jamaica. We had Edison Galbraith, who is the General Manager of Loan Origination and Portfolio Management at the DBJ. He talked to us about the DBJ Credit Enhancement Fund and the vouchers that are available. We encourage you to go to dbjcef.com to get information on the Credit Enhancement Fund, and also to visit dbjvoucher.com to get information on the vouchers available through the DBJ. So there are things that are available. There are ways out during this time. So you do have to ask yourself the question, and we've provided an assessment of your situation, and it is really an exam for yourself to ask yourself these questions. How badly is the situation now? How soon or how likely it is for my business to recover? What is the intended use of the funds that I'm seeking to borrow? If I get the funds, how long can they last in that in the current COVID situation? Remember, we don't have a crystal ball. So if you're looking at a 3-month time, that is not enough. You need to be looking at a 6-month to 12-month kind of forecast. What was my pre-COVID personal financial character? If you're not too sure, get your credit report. It will certainly give you that pre-COVID personal financial character. How is the bank structuring my loan or moratorium? We had the bankers here on our second episode. They talked about the relief packages. Your bankers are reaching out to you, ask the questions, understand how interest will be applied, understand what happens after the moratorium. Ask the questions, can I see that Excel spreadsheet? Ask the question about how likely will my credit rating be impacted, because this is very important. So whether or not you're taking a loan, moratorium, a payment deferral, this is a process that you will need to go through. Don't be afraid of the process, because you're going to have to face up to make these assessments, because we do not know how long this situation will continue. Please email us at sme@psoj.org. Join us again. Please rewatch the videos, share comments, send in your questions so that we can answer them. Join us next week, because we're going to be talking about managing productivity of our workers and engagement during COVID while persons are working from home. We also encourage you to visit our PSOJ website, PSOJ donate.org. The PSOJ is undertaking funding for food provision of food and health services. There is a very robust framework that is set up to provide care packages, to provide masks, etc. for persons in need. Please, every mickle make a muckle. We look forward to your donation. So we thank you again for joining, and please remember to share this video, to comment, and ask those questions. So join us again next week for another episode of COVIDCASTJA.